This subject is some unknown part of the mutual funds. We all know there is three types of mutual funds: equity, debt, hybrid. Primarily three types of. But other than all these three, we all know about the equity, debt, and hybrid funds. But we should know also about the arbitrage fund of funds. Gold ETF funds. What is arbitrage fund? Arbitrage fund is all is mainly a part of investment in debt and part of in derivative. A lump sum is left for the debt investment and the remaining is left for the derivative part. We all know there are a lot of derivative instruments to be traded. Firstly, equity derivatives are there. Within the equity, there is a index derivative. There is the stock specific derivative market. There is a commodity derivative market. There is a currency derivative market. And the arbitrage fund works as a hedge with all these instruments along with the debt instruments, as I have said earlier. Let's talk about little bit about the debt investment. Arbitrage fund invest in government bond and corporate bond and treasury bill, deposit of certificates. This is not FD. Deposit of certificates is not a FD. It's a bargain hunting. It's happened within the corporates and government, within corporates to corporates. Based on the market return scenario, how much return will be given is decided there. I am telling once again, it's a bargain hunting. Means when two parties are dealing with, one may ask for some rates, another may stick to another. Thereafter, fund of funds. Fund of funds means not a single fund manager, a group of fund managers are working, juggling with the fund and their naps. Means sometimes they are buying some units and selling others and keep on making money out of that. Means a retailer stay invested in mutual funds, but they keep buying and selling so frequently that they makes a lot of money out of that. That is fund of funds. They can invest anywhere, anyhow, by any means. Obviously, in a lump sum, because it's a corporate activity, we as a retailer can invest in fund of funds. And gold funds. I have also discussed earlier that gold fund can be in physical investment, and maybe some part in bond, maybe some part in electronic mode, and maybe some cash left liquid. So there are different segments of gold funds as they prefer to stay invested. And now, as a retailer, we can invest in government gold fund, sovereign gold bond. That is a very good option also. And finally, we are highlighting some parts that we should know when we invest in mutual funds. That cutoff time. Cutoff time has been revised. For the liquid fund, it's up to 2 p.m. afternoon to get the NAV of the previous day, previous closed NAV. Previous day's NAV will be applicable if we invest before 2 p.m. In other funds like equity and others, it is 3 p.m. We have to decide and invest within 3 p.m. to get the NAV value of the previous day closing. And thereafter, I should remind you that nowadays we can invest in any equity fund, any mutual fund from a mobile only. Here, for your information, I should remind that you will require a cancelled check to be a JPG file. JPG file means what you can click with a mobile photograph and upload, and your photo that you can manage anyhow, that also to be uploaded. And you can create folio number by putting all the individuals, by all the individual details along with your bank IFSC code and branch, all these that you will find also in your checkbook. Once after you got the KYC norms, now you will be eligible to invest anywhere. So these are the some little different thinking about mutual funds. One more important thing, the mutual fund units are sold in the exchange, means like a share. In ETF form, means suppose you are willing to invest in mid cap funds, you can buy as a share any amount if you have a demat and trading account. Like for an example, ICICI mid cap select ETF, you can go to the NSE and search for that. If you want SBI blue chip fund, you can get also in the name of SBI quality ETF. And a lot of other Nifty funds are there, Nifty ETF funds are there, and Nifty ETF funds available with all the banking and non-banking names. Means you have SBI Nifty ETF, ICICI Nifty ETF, HDFC Nifty ETF, Kotak Mahindra Nifty ETF, Tata Nifty ETF, and all these. So it's so easy to stay invested with mutual funds for a longer period of time or for a shorter period of time to make money out of that. Thank you. That much was a little different view on uh, mutual funds and all. Thank you. Hope we will meet again after some time.